opinions on the current stock markets and where I think things are currently going to be heading. Now, again, this is just my opinion. Please consult professional financial advice. If you do need it, don't listen to some guy on YouTube. Now, with all of that said, let's bring up the table from before. So what we were basically talking about before is that a lot of governments around the world are significantly in debt, and as a result, their annual interest payments on that debt are very, very, very high, and they are basically insolvent. Now, the reason why we look at the United States is because the United States has the biggest economy, the biggest stock market, and they basically dictate monetary and fiscal policy globally around the world. Now, when you start to dive into the $35 trillion in national debt, what they currently have, you'll start to see that a lot of this debt, 35 to 40% of the national debt is currently on lower rates. And now when you start to unpack that $35 trillion, you'll start to see that 35 to 40% of US Treasury bills need to roll over onto the current rates, what are 4.2%. So that basically means it is going to be very, very, very difficult to finance things from a government perspective, especially when it comes to the US. Now, the reason why I am highlighting this is because a lot of these treasury bills are up for renewal in the next 6 to 18 months. Well, basically in the next couple of months, really. There's over $7 trillion of debt refinancing what needs to be done basically this year from a US perspective, and obviously that $7 trillion needs to be rolled over onto 4.2%. Now, to give you some more context, the central banks are in a very difficult position because they cannot necessarily reduce their interest rates significantly, because if they reduce interest rates significantly, what you'll typically see is that asset prices and the stock market, etc., starts to go up significantly. Now, when you start to look at where the stock market is currently at, where asset prices are currently at, they are basically at an all-time high. And them massively reducing their interest rates would have large implications for the stock markets, asset prices, and inflation in general. Now, they can't do that just by doing it for the sake of doing it. They need an excuse to significantly reduce these interest rates. Now, as you can probably tell, they're in a very difficult position, especially from a central bank standpoint. Now, they can't necessarily bring down the interest rates because they need a reason to bring down the interest rates, not just because asset prices are falling. They need a real reason, meaning that things are really starting to break. And obviously, this would give so much relief to governments around the world. Now, there is another avenue, another lever, what they can kind of pull, what is obviously printing money. Now, I don't think that this is going to be an option because the annual interest payments are significantly high. They need to bring the rates down because obviously you have $7 trillion what needs to be refinanced. So even if they did print more money, that money will obviously leak and distort prices from a stock market perspective, from an asset perspective, from a stock market perspective, from an asset perspective, and it would massively, massively hurt lower income families. Now, again, we will start to see this massive divide in terms of inequality, especially with what Gary talks about. But like I'm saying, there's a lot of complexity to this. And again, I don't think Gary really understands what he's really talking about. So again, they can't necessarily print the money because it will really hurt low income families. They need to bring down the rates. So what are they going to do? My opinion and my assessment is that they really need to bring down asset prices. They really need to, let's say, crash the stock markets, bring the stock market down, bring asset prices down, and then they can obviously intervene, have an excuse to massively reduce the interest rates, and then start to stimulate with obviously printing of money. This will significantly relieve a lot of governments around the world, and obviously the whole cycle will repeat again. Now, obviously, bringing down the stock market and bringing down asset prices is going to be very, very, very disruptive, especially when it comes to banks and obviously exposure what banks have in terms of their loans, and also from an investor perspective as well. I think it's going to be very, very disruptive. Now, like I was saying to you before, now I really do believe that Bitcoin does solve a lot of these underlying systemic problems. Now, I'm probably going to do another video on why I think that is, because obviously this video is significantly long, right? But the thing is, during that time, especially when you start to see, let's say, asset prices come down, that type of event would typically be called a liquidity crisis, meaning that everybody goes to the crash. everyone goes to cash, right? So you'll typically see assets like Bitcoin, gold. You might even see that gold and Bitcoin actually go up, to be honest. But again, you might start to see a lot of these assets start to depreciate because a lot of people are running to cash because they feel that that is a safe haven. And again, we should see the US dollar start to tick back up because everybody typically runs to the US dollar because it is the global currency. So again, I mean, that's just a little bit of speculation, but from the people who normally say to me, well, the price of Bitcoin is very, very volatile. Now, what I would say is that the price of Bitcoin is volatile in the currency what you currently view it in. Now, if you're viewing Bitcoin in a Turkish lira, you know, Bitcoin just keeps going up and up and up and up and up. And the reason why that is because obviously the currency, what you are viewing it in, is being significantly debased. And also from another perspective as well, imagine that you are at a large institution and you've got Dave from Hull or from Edinburgh who is going to front run you into the trade. You are not going to allow retail to front run a large institution into the trade. You want to shake them around in terms of price action, because again, this is how you create liquidity, right? This is how you make people really understand what they actually own and why they actually own it. Now, again, this is just my overall assessment of what I think is going to happen. And I really do believe that this is going to happen sooner rather than later. And the main driver of that is because we have $7 trillion what needs to be refinanced in the next 6 to 12 months for the US government. And it's not going to be rolled over onto and it's not going to be rolled over on 4.2% interest rates. They need them interest rates to be like 2%. So what needs to happen? They need an excuse. And again, is Trump going to take the blame for this? Most likely. Is it Trump's fault? Most likely not. But he's going to be blamed for it anyway. Someone's going to be blamed for it. It's like hot potato, right? It's like whoever you put in office is going to get blamed for it. And the Democrats are going to say, well, this is Trump's fault. But again, look under the hood. Look what is actually happening. And you'll start to see this needs to happen. Like, this really does need to happen because of the interest payments on the national debt. And hopefully, I'm making myself clear by saying that I really do think that asset prices on the stock market really need to come down and that they need to cut the interest rates and obviously create the event and create the illusion for the majority of people. So they start to stimulate and obviously off we go again. And like I was saying to you before, I really do think that Bitcoin solves a lot of these underlying systemic problems because again, you cannot mess with the money. The money has rules, but it has no ruler. You can't just keep stimulating and printing, and you cannot print more Bitcoin. You cannot create more Bitcoin. So anyway, I hope that just gives you a great insight in terms of how I am viewing the economy and my insights in terms of the markets. And yeah, the long and short of it is that $7 trillion needs to be refinanced in the next 6 to 12 months. And how are they going to do that? Anyway.